Hello guys and welcome to Daily Market Movements. Welcome to another episode of Industry Watch. In today's episode, as always, we're going to be analysing the NASDAQ100 and the S&P 500 price chart. But just before I start today's video, I just want to say a massive thank you to all 125 of you who joined our subscription service yesterday. We had a record day of you joining our streaming service and private signal group chat. So thank you very much and welcome to the Daily Market Movement team. For those who are watching this YouTube video and interested in joining our private signal team, then please head over to our website, dailymarketmovements.com. I've left it in the description of today's video. But let's talk about the markets. NASDAQ100 and the S&P 500 falling for yet again another day yesterday. I think the NASDAQ100 was down 2.10%. S&P 500 was down around 1.5, 1.3, I believe. So not good. We've started off yet again another trading week in 2022. This is the third week in a row that we are seeing declines here for the NASDAQ 100, and I think it's the second week for the S&P 500. But that being said, I still see signs of positivity yesterday. We've seen pretty much all over the news, all over most social media platforms yesterday that Microsoft have applied to purchase Activision, the game maker, for a record $68 billion. Now, this is very good news, and the reason being is because Microsoft obviously has seen that Activision stock price has fallen from roughly, I think it was trading at around $100 a share not so long ago, and it's gone down to $60. And Microsoft has obviously seen that this stock right now is a fantastic time to buy. So, Microsoft, although it's a merger and acquisition, they're also looking at stock prices saying, okay, well, obviously we will be paying a premium here, but I think that right now is a fantastic dip to buy this company at a premium, because if they were paying a premium up at $100 a share, then of course they'd be paying a lot more money. So that to me is very positive news. We're seeing some of the largest companies in the world coming out and buying other companies at current levels. So very positive with regards to that. But let me just break down a few technical things that I have spotted on the chart which I don't like. And we have just wiped out January 10th lows. That is not good. That's this little circle here. I put a little thin white line across the board. As you can see, we're currently trading down at 15,071. And of course, for the S&P 500, we've done exact same. That was that January 10th low, all the way at 4,581. We've just snapped down below it. And of course, we're now trading below this uptrend that we've been trading in since May 2020. So, from a technical perspective, that's not very good. That being said, one thing that I do like for the NASDAQ 100 is, yesterday during the videos, I explained that a correction phase normally lasts for about 10%. We are now, as we speak, at 10%. Okay, so anything more than this, it starts to get a bit more worrying, because you could potentially enter into a bear market. And as I explained yesterday, I personally do not believe we are in the right environment to enter into a bear market. We're way too bullish. Things are just are going too well for us to be in a bear market at this moment in time. As well as that, we have the 200-day EMA, which is just below 15,000 at around 14,970. That should be looked at as a key level of support. Last time we broke below the 200-day EMA was, of course, when we had that massive sell-off when COVID first hit. Apart from that, we haven't broken below the 200-day EMA in a significant amount of time. I think it goes back all the way to 2018, and that's when we started. We had a steep correction back then, and that was with regards to the volatility, with regards to the election, etc. But on several occasions, the 200-day EMA has offered support, and for the past 18 months, we haven't even come back to test it. If we were to break below the 200-day EMA, that's when you run for the hills. That's when you close all your tech positions and you get out of the market. And when I say break below it, I don't mean within a trading day. I mean we get a daily or a weekly close below the 200-day EMA. That is when you should potentially close all of your tech trades and just let the market settle for a week or two. But I don't believe that's going to happen, because look at the RSI, guys. We're down now at 34. We're approaching the oversold territory. We've got the 200-day EMA that should offer us support. 15,000 is a large psychological round number. So I see this as a fantastic buying opportunity. Of course, my current signal team, we do hold a position. I'm not going to share that with you with regards to this video. You would have to go and subscribe to our streaming service over on our website. and that will obviously give you access to our more in-depth video where I do explain the entry and exit strategy. But this area here is lining up for a fantastic buying opportunity where you could have a very effective and good risk management with regards to how tight your stop loss is and how far your take profit is. So this is setting up for a very nice medium to longer term trade. S&P 500, of course, we haven't fallen as far as the NASDAQ100 because it's a basket of both value and tech stocks. In the first week of 2022, values did actually rather well. It was just tech that really sold off, but we are now down 5.51%, so this is considered now to be a correction for the S&P 500. But could we see a bounce? That's the big question. Of course, the Fed continues to battle inflation. When it comes to battling inflation, the Fed has to cut interest rates, and that's something that we are going to see a lot of this year. But the question is how much? Do we get 3 hikes, which I think would be quite positive for the market, or do we get 4 or 5? But on the flip side, we do need inflation to come down, and if we can bring inflation down by hiking interest rates by only 3 times, then that could be a catalyst for the market to rally a lot higher. And that is going to wrap it up for today's video. But just before I let you leave, I just want to quickly show you our brand new streaming service. We've recently launched this website that you can see in front of you. This is where we provide in-depth analysis videos as well as trading signals via our Telegram group chat. Once subscribed, you'll then have access to all of our in-depth analysis videos as well as access to our private Telegram group chat. We cover various markets such as commodities, US stocks, indices, and cryptocurrencies. We also have a video category where we provide educational content so that you can improve your trading skills. If this sounds appealing to you, then you can find our website link in the description of this YouTube video at dailymarketmovements.com. If not, then I would just like to take this time to say thank you for watching today's YouTube video. Please give my channel a subscribe and give this video a thumbs up. Thank you very much, and I hope to see you again soon.